okay, they're not going to cut rates. I knew that. I think everybody knew that. Now, and our gold actually went back up again. That's right. Remember, we started to rotate out of our tech stocks in February, some in January, but January, February, definitely February. We started to rotate out of our tech stocks. We started to rotate into bank stocks. We rotated into oil, and we rotated into gold. Now, one of the reasons why we did that is because we knew that the valuations on the big tech stocks, the mega tech stocks, it would be impossible, okay, for earnings to keep up with those valuations. The valuations are insane. They're nuts, okay? So we felt that early on. We felt that, matter of fact, we started thinking about that in September, okay, before the new year. I said, I don't know how they're going to keep up with these valuations. They just can't. And I was right. We started to see in January, they started to, the big hedge funds here, let me show you. And most people don't know this, and they're not going to tell you this. The hedge funds, take a look at their participation or their exposure to the big mega tech stocks, or the mega cap stocks, was about 50%, 56% in 2022. They cut their exposure in 2023 by 12%. But look what they did. They increased their exposure by 99% in 2024, or between 2023 and 2024. And all of a sudden, I saw that and going, no, we're going to start rotating out of these guys because these valuations are killers, okay? And here's what we did. Take a look. Watch this. We started to take, and we went into our oils. So there's our oil. See how we started our oils? We started actually back in our oils back here in January, but our color-coded chart, okay, turned green. This is your buy signal right here. It's never wrong. There's your buy signal right there. And once that turned green, we loaded up. And so our oils really started to take off nicely. You can see it right here. Let me bring it back here for 3 months. You can see the difference. So what we did is we started to see, like Apple, for example. We saw Apple. We started to short Apple, okay, and in January we started to short Apple. So, and you can see why. And we started to short Apple, and then we went in and we started to buy oil. Okay, and here we started to buy oil. That was in February. You see what we did? So Apple started to fall apart, and then also Tesla started to fall apart, and so we started to rotate out of these. Okay, and then Google started to fall apart, and not only did we rotate out of the big tech stocks, even though you still had great performance by NVIDIA, and we stayed in NVIDIA still, but we didn't have that much in NVIDIA. And look how NVIDIA, once they gap up, once you have these gaps, okay, once you start getting these big gaps, okay, that's where you start running into trouble because they get exhausted, like NVIDIA and Meta. See how when they gap up like this, you notice how they have a hard time making new highs? And you notice NVIDIA, remember it had its big gap right here. Remember how they had that big gap up? And look how everybody started to buy up in here, I think was going to keep going. It hasn't. So by rotating, even though Meta is always strong and NVIDIA is always strong, but when you can see the hedge funds, okay, are rotating and they're dumping, we did well by going into, as I said, look at this, our USO, our XLE, look at this, OIH, these are all oil stocks. And look at this, we went into our bank stocks, JP Morgan, look at this, Citibank, Bank of America, all these we started to go in. And we started to go in these here. And matter of fact, we started even some of them early back here because this is our color-coded chart. This tells it's a chart we designed. This told us money was going in this direction. So we even started to buy these stocks and the bank stocks back here in November. Okay. Wells Fargo, we started to buy back here in November. And we've gotten big runs out of these stocks. So these stocks are really better than the tech stocks. And so we took our members, rotated them out of the tech, and went into, I said, oil right here, went into our banks. And then we started to go into miners, okay, because the dollar is going to get clobbered. And we've done pretty good with the miners, okay. We just started here, okay. We just started to buy them in March right here. We're doing pretty good with them, okay. Our GDX, okay, we just started to go into that. Like she's back up here today. Now, the reason why these are going back up today, the miners are going back up, GLD, you notice how they're all going back up? Because miners do well when they pause a cut. Remember, they're going to say they're going to do cuts. Everybody thought this was going to be a cut. I knew it wasn't going to be a cut. So we started to buy these golds right here, right? And then everybody said, oh, no, they're going to go down because they're going to do cuts. And I said, no, they're not going to do cuts. And these stocks are going to go up because they're not going to do cuts. And that's what's going on. But the whole point of this is that, look, and as they're not being honest with you, okay, as to what is really, how does the economy stand? How does the market stand? I mean, the economy alone, they keep saying to us, listen to this garbage here.
Strong labor market is pulling people in, giving them a chance to reap some of the
We don't have a strong labor market.
You can look around to different corners to see places where things are slowing. But as long as we've got a solid labor market.
This is what they always pushing. And they've been pushing to keep this. Look, we've had one group pushing this whole stock market, right? And they keep on saying, don't worry. Don't worry about inflation. Don't worry about inflation. Matter of fact, if they don't cut rates, the market's still going to keep going up if they don't cut rates. Don't worry about it. Okay, we don't need rate cuts. I mean, they really believe this stuff. Okay, and then they keep on using that same thing over and over. We got a strong labor market, Well, you don't have a strong labor market, damn it, when you're sitting there. And I mean, no country has a strong labor market, not just us. When in the past 12 months, okay, or February rather, in February alone, we haven't had one net new full-time job. And we haven't created any full-time jobs. In fact, all the jobs we're creating are part-time jobs. And if you go take a look at the Empire State, okay, manufacturing, which everybody looks at as a gauge, how's manufacturing doing? It told us it was in deep trouble. In fact, we're at a 4-year low in manufacturing, and they're trying to convince her we got a strong labor market. Well, you don't have a strong labor market when all you got is part-time jobs, not full-time jobs, and the part-time jobs are low-paying, so the economy is not doing well. And let me tell you something else. Take a look at this here. Okay, let's look at I just want to show you the, oh, by the way, let me see, I think I have it here. Where's this one? Yeah. Look at the money supply. The reason that we have all these gains, okay, that we have the S&P up 130%, the NASDAQ up 144%, gold up 48%, Bitcoin 293%, homes up 48%. Are you kidding me? It's all from this money. Look at, if you go back and take a look at from 2008 and 2009, okay, when we only had in money supply $7 trillion. That's it, $7 trillion in 2008. Look what they pushed it up to until 2019. And where was all that money going? All that money was going into, right here, let me show you. All that money was going into, they would get the money, print it, give it to the Fed, and then the Fed, Powell, would go to the banks, say, here, we're going to buy all your mortgages and we're going to buy all your bonds. And they took the mortgages and bonds, put them on their balance sheet, and now they could take the money, they're full of money, the banks, and they take the money and they feed it to companies. But instead of the companies using it for business investment, they use it for stock buybacks, and that's how they got the stock market going. You only can do that for so long. And it's okay because you start running deficits. And when you start running deficits for a small period of time to get people consuming, and that's okay, we get that. But you've got to have a disciplined Congress and disciplined president to make sure you stop it, so that all of a sudden the deficits don't start working against you. Because if the deficits are too big, all of a sudden it kills everything. It kills wages, your earnings, your economic growth. And that's where we are now, because they let this deficit get so bad. We're on a $2 trillion run rate right now. Because why? Because Congress didn't care. Okay? The president didn't care. Remember, they got reelected. They say, look, as long as people think things are good, but things aren't good. What made the market go up was all this money printing. Look at the money supply. And from 2020, look what happened when COVID hit in 2020. Okay? Before COVID hit, we had $14 trillion in money supply. When COVID hit, it went to a peak of $21 trillion. That's been pushing this whole economy, but it's also been pushing our deficits. Our deficits are getting bigger, and we're having again, okay, stop listening to these people. Now, everyone says, well, Phil's wrong about the market. It's never going to crash again. And I always bring up how you got the inverted yield curve, and they say, oh, God, that's happened 3 years ago. Really? Let me tell you about the inverted yield curve. We've had, since 1978, we've had 6 inverted yield curves. And every one of those were followed by a crash. Every one. Not one or two, but every one. So, again, the strong labor market, they keep pushing. First, they've been pushing this whole stock market rally, okay, not based on performance, okay, not based on performance, but this whole market rally on rate cuts, rate cuts, rate cuts, rate cuts. Okay, that's all they've been saying over and over. Cuts. That's what's been pushing the market up. But on the other side of it, we got a one horse in the race. All those big tech stocks. Now the big tech stocks are ready to rotate over. They're starting to fall over, as you can see with Apple and you can see with Tesla. That's why, again, if you join our gang or just do it for 10 days, and you'll see why we rotated out of Tesla and we got into USO. Okay, oil. We rotated out of Tesla. Look at this. And we bought JP Morgan. We bought Citi. And we bought a lot of these back in here because we knew what was going to happen, because these deficits are getting too high, and the valuations on the stocks that are leading the whole market up, the 7 stocks, those valuations have gotten insane, and we were right on that. We were right. So by going to the bank stocks, and by going to the rotating out of the tech and going into the bank stocks, going into the oil stocks, we made a right move. And look at gold. Gold, again, we started to buy gold right in here, those miners. We bought these right here in March. We just started to buy. Why? Because I know that what's going to happen here, let me put up for you TLT. This is the bond market right here. TLT. Okay, the TLT. All right. So TLT, here, let me get it up here for you. Sorry about that. Okay. So TLT, here's the bond market. All right, let me bring it back. When the bond market's selling off, okay, that means what's happening is you got your interest rates are going up, okay? Interest rates are going up and your dollar's going up. Same thing here, right? Interest rates are going up, dollars going up. Same thing here. Interest rates are going up, dollars going up. And right now, same thing here. Interest rates going up, dollars going up. And that's been hurting our gold. But we got in gold knowing that this is going to turn around, okay? Instead of coming down, remember, instead of the bond market selling off and yields going up, just like here, bond market selling off, yields going, this is going to change. You're going to see like what happened here. You're going to, all of a sudden, you're going to see the bond market go the opposite way. You're going to see the bond market go this way. And then what you're going to see is yields. You're going to see the dollar drop, and you're going to see yields drop. And then you're going to see, again, once that dollar starts dropping, gold is going to just be the leader. I'm telling you, it will take off. And so if you want, just join the gang, follow us free for 10 days, And what we're looking at is a breakout right here. Okay, right there is where we're looking for that breakout, right on that little resistance area, right up there. Let me bring it back for you. So that's what we're looking for. So the again, this is AU. We just bought in here, pulled back. Now it's back up today. The reason why it's going back up today is because they said there's not going to be a rate cut, and when they pause rate cuts, gold goes up because they know they can't do a rate cut. How can they do a rate cut? We're at 5.25%. The interest rate, and it's there to fight inflation. Inflation's getting worse. Biden just came out. Remember what happened with the when Biden got into office, the deficits, I forgot what percentage the deficits grew between the time he got in and to where it is today, but it's a huge number. And they're not controlling the deficits because remember, in Washington, you have politicians. They got to get reelected. They got to convince the people the economy's doing terrific. And doing terrific, we all know it's not doing terrific, but don't you hear them out there every day, Biden and all of them? Hey, economy's doing great, economy's doing great. No, it's not doing great, okay? It's not doing great. And so what's happening is you're going to see, and that's why I think it's important, make sure you watch this TLT, because that's your bond market. And all of a sudden, you're going to see the bond market start going up, and you're going to see the yields go down, dollar goes down, and then you're going to see gold take off. So we've been right about rotating out of we caught all these tech stocks back in here, okay? But once they started to gap up, and even here, we knew this had to end at some point, and that's why we rotated. Okay, and so again, why don't you join us for 10 days, and just again see what we're doing, and I'm telling you, at the end of 10 days, you're going to say, God, I wish I did this long ago. All right, and so again, you gotta learn to rotate. The market's forward looking. Can't keep listening to these guys out there on these jibber jabbers on TV. They're there just to make money for themselves, okay? That's what their job is, all right? Everything's supposed to be wonderful. But again, I'm going to show you this last right here. Look at this. Put it over here. To remind you again, the only reason the stock market's been going up since 2009 is because of all the money they've been printing. And the Fed's been taking the money and buying all the bonds and mortgages, putting it on the balance sheet, and then the bank are full of cash now because they sold all their bonds and mortgages. Now they got cash, and then they go and they get all the companies, money, and they're doing stock buybacks. But there's a problem. We're filled up to the top up here now. If the market crashed today, like 2008, they can't get the market going. They can't do QE because they have no room to again print money, go to the banks, buy all their mortgages and buy their treasuries, put them in the balance sheet. We're filled up to the top. They don't have any room. And the problem is when they're trying to unload to get some room here, as they're unloading, when they're not, when these bonds get paid off, they don't roll them back into the treasury. They let them just drift away, and so doesn't the dollar just drift away. But the problem is that the balance of the treasuries that's in here, the interest rates go up on them. So interest is going to not come down, believe me. If anything, inflation is going to go up. That means interest rates got to go up. So you just have to be in the right stocks like I just showed you. See, we rotated in the correct stocks. The banks, we rotated into the gold, we rotated into our oil. And we also had some of the tech stocks early on, which we did well with. So that's it. So please hit subscribe and like. I'd really appreciate that. And I just wanted to give you a little overview tonight of what was going on, okay? And just join the gang for 10 days and follow us on our Pro 2 color-coded chart, because every time that Pro 2 color-coded chart turns green and tells you to buy, it's always right. If over 10 days, it's not going to cost you anything, and you'll see if it is always right. Because when we bought all those stocks based on the buy signal from our color-coded chart. We'll show you how to do it. See you on the chart.